Shares of Hindustan Aeronautics climbed nearly 3% after the cabinet approves the procurement of 240 engines for the Air Force's Sukhoi fighter jets for over 26,000 crore rupees.
Mediasis surged more than 2% after 13% equity worth 580 crore changed hands at around 612 rupees a share. Sources say that Bessemer India was likely to be the seller on the other hand. Signature Global as well slips close to around 4% after a large trade with 828 crores of worth of shares change hands at around 1,449 rupees.
Vedanta climbs nearly 1% after the company's board approves its third interim dividend at 20 rupees a share for FY25.
Kaynes Tech surges more than 5% after the cabinet approves the proposal for Kaynes Semicon to set up semiconductor unit in Gujarat. The management tells CNBC-TV18 that they could see a revenue potential of around 4,000 crores from this particular investment, which they expect to hit by FY29.
And Premier Energy surges after a stellar debut on the exchanges. The stock lists at 990 rupees, 120% premium to its issue price of 450 rupees a share. The management joins us in just a bit.
Hello and welcome to Chartbusters. I'm Nigel. With me is Hormuz. The markets are in unfamiliar territory in comparison to what we've seen the last week. We're mildly in the red, more or less flattish as we speak. But par for the course. Your portfolio, though, will be feeling much better because the mid-caps today, after a while, are outperforming what the headline index is doing. Hey, Hormuz.
It's been a while, Nigel, isn't it? After 13 days of gains, well, 13 is an inauspicious number. But let's see if Nifty can get to a 14th one. Well, they say it's an inauspicious number, as what the legend goes by. But yes, the Nifty is currently trading below the flat line as we speak, 25,250. And it's been that level all for almost the last few days as well. It's been consolidating around those levels, but trading above the flat line. But for now, it's below the flat line, as is the Nifty Bank as well. FMCG and Pharma are the two indices are doing well. But then, as Nigel just highlighted, the broader markets are doing well today, outperforming. The small cap index up 0.5%, the mid cap index up 0.3%. Moving on to some ideas for profit from Money Control Pro, Lekha Badlani of moneycontrol.com joins us to talk about a stock that she's tracking very closely.
Yes, thanks. So the stock pick is Krishna Diagnostics, as it is ramping up its projects well and continues to deliver healthy margins. Now, in its recent Q1 results, company's revenue grew by 22% YOY and EBITDA was up 39% with 26% margin. Now, this improvement was primarily led by ramp-up of newly established centers. Now, going forward, its growth prospects look bright as the company has started receiving payments from Himachal Pradesh, which were earlier delayed due to elections. Now, this will improve the working capital in the second quarter. Now, it has a pipeline to execute 52 radiology centers and 1,600 pathology centers. Now, all these tenders are between 5 to 12 years in duration, thus providing long-term revenue visibility. It also remains a net debt-free company, providing enough balance sheet strength to fund all the capex project. Now, Krishna is still awaiting the decision of the Rajasthan High Court for a project worth approximately 250 to 300 crores annual revenue. But even excluding this project, the management is confident of achieving a top-line growth of 25 to 30% and a EBITDA margin of 25 to 26% in FY25. Also, its portray into B2C will act as a positive driver, as it will have differential pricing and it will improve the addressable market of the company. Now, trading at approximately 9 times FY26 estimated EV/EBITDA, the risk-reward appears favorable to add the stock for the long term.
That's a lot for that, Lekha. Well, let's focus on the new listing then. It's been a stellar debut for solar cell manufacturer. That's Premier Energies. They listed with a gain of more than 100%, and currently as well, the stock is holding with solid gains. To understand about the way ahead, we're joined by Mr. Chiranjeev Singh Saluja, who's the managing director of the company. Hi, Chiranjeev. Congratulations. Just a week or so ago, we had you in the studio outlining the business. This time around, we're going to push you for a few numbers. But before we get to that, I wanted your comment on this, something that starts sentiment a little bit. You all had done an issue. The IPO opened a few days later. But just days before the IPO opened, you all had sold some shares at the IPO price to a clutch of investors. It could be according to the rule book, but it spoiled sentiment a little bit. What's your comment on that?
So, good morning, Nigel. Thank you, CNBC, for having me here today. So, to answer your question, Nigel, this secondary sale which we had done on the 23rd and 24th of August This was more because of the unprecedented demand we were seeing from the investor community. And the reason to do it closer to the IPO was because we wanted it to be at the same price as the listing or the price which gets approved by SEBI. This was done well within the regulatory ICDR guidelines. And most of the secondary which was done, about 70%, was done by the private equity fund, not the promoters. And if you look at the promoters' shareholding, we are still at close to 64%, stake in the company post the listing.
It could be according to the rule book, Chiranjeev, but the street believed it was against the spirit of the game. But you have given us your clarification, so we'll take that, as you said. Let's focus on a couple of aspects. Now you're a listed company. You can give us a guidance. So tell us what kind of a revenue growth should we be working with for FY25? What kind of a margin outlook are we looking at?
So Nigel, as I told you when we had our last interaction, we are looking at a very strong revenue growth because we have doubled our capacity. So looking at the strong demand in domestic and export both, a very strong demand within India, which is driving this expansion. And if you look at the capacities which have doubled, so you can really look at the guidance that we would be having a very rock-solid CAGR this year.
Chiranjeev, good morning. Thank you so much for joining in. Many congratulations on your listing. You'd be a happy camper today as a lot of shareholders have received the shares today. But I wanted to ask you, Chiranjeev, about your financials. As you mentioned, would you like to quantify that as well? You're looking at a very strong CAGR is what you said. If you would like to quantify that in terms of numbers, whether it be revenue growth or margins for the financial year, and also couple that up with the likely order inflow that you are slated to receive in FY25.
Yeah, so the order book is really strong. It's 5,900 crores. There is a huge pipeline which is in the making. So we are looking at a very strong order book. In terms of revenue, as I told you, we have doubled our production. So that should give you a very clear guidance that with a strong order book and capacities doubling, we would be looking at a very, very strong, almost doubling our revenue this year.
Okay, so this year you're saying you're going to double the revenue. So it'll move from around 3,100 crores that you did last year. You could achieve revenues of around 6,200 crores. Just to clear the air, you're not talking about revenue potential. You're talking about revenue that you can deliver in FY25. Is that correct?
Yes, if you look at the manufacturing capacity and the order book and you look at our Q1 numbers, this is where we are heading to.
6,200 crores. So we'll hold you on that number, and there'll be some benefit, I guess, of operating leverage that could come in as well. 15 to 16% is what you did last year. Will margins improve?
I think the margins should improve. The board has to take a decision on guidance, in terms of the margins. But then when you look at the strong demand in the market and you look at the kind of this sector, the way it's growing, I think there is all positivity.
So from 15% or almost 16% that you had in FY24, do you see that margins going up to say 17, 18 or maybe even 20% if you're being optimistic here?
So if you look at our Q1 numbers, we were already close to 20%.
Right. So Right. So I want to get back to the order inflow bit, Chiranjeev. You mentioned that your order book is almost 6,000 crores. What is the order inflow number that you are likely to receive? If you can quantify that, and if there are any projects or any orders for which you are L1 currently and you are slated to receive those orders, if you could give us that number as well.
So no, there's nothing like we are L1 in any order now from the government side, but then there is a very strong pipeline. I would quantify that number to be at least another 4,000 crores, which is under discussions in final stages of finalization.
One last question, Chiranjeev. What about the debt picture on your books from the fresh issue? You are planning to expand your capacity from the proceeds that you are raising. What about the debt on your books currently, which is the stage that where you expect to reach peak debt and when it starts tapering off?
So our gross debt is about 1,400 crores. We are looking at raising another 2,200 crores for this expansion, which we are doing. And the peak would be close to around 4,000 crores. And then it will start tapering off in about 12 to 18 months.
Okay, all right. Just a quick question, Chiranjeev. You're going to be doing 6,200 crores in this year itself. What about the following year? Because I think you had told us your revenue potential is around 7,000 crores. So will you have to incur some more capex?
No, we don't have any plan for any additional capex now for at least the next 3 years. But then as we grow, we will keep adding more capex.
All right. So what would be the revenue potential post the capex that's already outlined? Because you're going to do 6,200 crores in FY25. So I want to understand, if you're not going to be doing any big capex, then what is the revenue potential, optimal revenue you can do with the current gross block?
Yeah. So with the current gross block, we would be in the same levels as you know, in terms of doubling the capacity. We should be in the range of about 6,000, 7,000. But the new capex coming in FY26 and 27, this is going to be a new twofold jump in terms of capacity. We'll be doubling our capacity in module and almost tripling our capacity in solar cells. So, about FY27 onwards, we're looking at, again, a significant growth.
So keeping this two capacity expansions that you're talking about, 26 and 27, what is the revenue potential then post this by 2027? What is the revenue potential?
So if you look at the in terms of the capacity, as the capacity doubles, we are looking at, of course, doubling the revenues.
Okay, so then you could do practically around 13 to 14,000 crores. Is the revenue potential keeping 2027 in mind?
Yes. So yes, once the capacity comes in, of course, there is going to be significant growth. That's a 4 gigawatt cell and module which will come in.
Okay, all right, Chiranjeev. Thanks a lot for joining in. Congratulations on the solid listing. We'll hold you to these numbers, and thanks for clearing the air as well with your perspective on why you all did that issue prior to the IPO. Wish you and your team all the best, and we look forward to hosting you back on CNBC-TV18.
Thank you.
All right, well, time to slip into a short break. On the other side, we'll get back to another company which is into smart meters. Mr. Jitendra Kumar Agarwal, who's a joint managing director of the company, will be joining in.
Back with us here on Chartbusters, continuing with corporate conversations then. Genus Power has been in the news on the back of a spate of order wins, which has seen the company win contracts worth nearly 11,000 crore rupees recently, taking its total order book to over 32,000 crore rupees. To understand the order completion timelines and the outlook for the business, we are being joined by Jitendra Kumar Agarwal, who is the joint managing director of Genus Power. Mr. Agarwal, good morning. Thank you so much for joining in. I'd like to start off by asking you about these orders that you have won recently, almost 11,000 crore worth of orders that you have won. What is the expected completion timeline for these orders, and what are the kind of margins that you are expected to generate from these orders on completion?
Good morning, guys. So, you rightly said the order book is 32,500 crores. So you have to break this order book into 4 parts. This order book includes all the SPVs and the platform. So the 11,000 crores which we have recently received is from Rajasthan. These all contracts are from Rajasthan. There were 9 contracts which we won. And in total, company has a 32,500 crore order book. Out of which 2,500 crore is a typical supply orders what we have been doing from last 2 decades. And 30,000 is the order book from the AMISP orders. And these AMISP orders then are given to the platform. So 25% goes to the platform, 25% is the O&M, and 50% is the supply and installation. This is how we have to break this order book. So it is very important for everybody to understand that this order book is for 7 to 10 years, and this has to be broken in the right way.
And what are the kind of orders, now that you have won orders worth almost 11,000 crores this time in the recent past, in the say last 10-15 days, what are the kind of orders that you are anticipating for the rest of the financial year as well? Is there an order pipeline that you can quantify, and are there any further bids that you have made where you are L1 and projects like that? If you could quantify that for us.
So we are L1 in couple of bids, one in Punjab and one in Himachal. Beyond that, there are no much tenders which are going to happen in this financial year. So I'm not expecting any great orders book that is going to happen in this financial year.
Okay, all right. Hi, Mr. Agarwal. Good morning. Nigel on this side. Just want you to reiterate that 32,500 crores. You broke it up for us. I just missed that number. How much of it is the manufacturing part? How much of it is attributed to the JV?
So the whole 30 out of 32,500, 2,500 is the typical supply orders which we have been doing in the past. 30,000 comes from the AMISP, which goes to the platform. So now you have to break this 30,000 into three pieces. 50% is the supply and installation, which will happen in next 3 to 4 years. Remaining 25% is the O&M, which will happen in 7 to 10 years. And 25% is which remains with the platform. So this is how the order book needs to be broken up.
Okay, got it, sir. Thanks for that. Now, for this year, you know, the numbers are looking very, very large. What is the execution target that you have for this year? Both on the revenue front, I believe you were guiding. Last year you did around 1,200 crores, but this year you were talking about doubling those revenues. So what do you end this year with? And what kind of a sustainable margin should we work with?
So 2,500 crores is the guideline we have given, and we are definitely going to achieve that. So that remains same as on date. And the margins, we have been giving the guidelines of 15 to 16%. So it will be in the same range.
And this entire order book, by when can you execute it?
So there, as I said earlier, installation and supply will happen in 3 to 4 years, and remaining 6 to 7 years will be the O&M period. So total 8 to 10 years for this whole 30,000 crore order book of AMISP as on date.
You know, Mr. Agarwal, with all of these orders that you are receiving, I'd want to ask you my question in two parts. You mentioned that you are L1 in a couple of projects in Punjab and one in Himachal, if I got that correctly. If you could give us that number as well, what is the size of those projects? And B, the second part of my question was, how is the working capital cycle shaping up for the company now after these orders that are coming in?
So first is, these are around 3 million meters, around 1 million in Himachal and around 2 million in Punjab. So that is what we are expecting in next 5 to 6 months. Let's see how it shapes up. And working capital wise, since most of this business has moved to the platform, and with platform we have a very good working capital cycle. So over the period in next 6 to 12 months, you will see the working capital cycle of Genus improving significantly. Because right now we are dealing directly with the electricity boards, where our working capital cycle is generally very long. Once these orders are moved to the platform, and then the supply happens to the utility and payment is made by the platform, the working capital cycle of the company will significantly improve in the next 6 to 12 months.
By how much? Quantify it. In the next 6 to 12 months, it improves to what?
Whatever the stage it is today, it will be around 140 to 150 days. So currently it is much more than that.
Okay, so it moves to 140 to 150 days, right? And currently, I think it's 250 days plus, right?
Yes.
Okay, got it. All right.
It will move significantly.
All right. Before we focus back on the fundamentals, the promoter entity had sold a small stake. What's happening there, sir? Do they plan on selling some more stake? One wouldn't blame you. Actually, in the last 3-4 years, the stock is up 10 times. But investors will want to know, is the promoter only coming and cashing out a little bit more? So do you all have plans? Point number one. And point number two, the trust has close to 10% stake in the company, right? As of now. And that money, whenever you all sell those shares, will come back to the company itself. Could you clarify on both these two aspects?
Absolutely. So first thing is, it was just we wanted a very good investor to come in the company portfolio. So you will see this has gone to a very reputed investor fraternity. So that is the only reason the promoter went ahead, and because they wanted a larger chunk. So there was no other way than the promoter has to come into the market. Second thing, this trust shares, the money will always come back to the company. These are held by that company itself, and that is why we have kept them. If at all, whenever we need some cash in the company to do the capex, we don't need to go to the debt market. We always want to maintain a net debt zero situation, which we have been maintaining from last many years. So that is why these are going to help the company only, if at all it is needed to.
10% is worth 1,300 crores. Maybe you'll have a higher number in mind. You know, very fact that y'all have not yet sold the shares. Got it, but you didn't clarify. Promoter will sell more or no? It's done.
No, promoters, I don't think so. We are going to sell more. This was also a very specific case. We did that.
One final question, Mr. Agarwal, very quickly. You've forayed into a whole host of new businesses, be it smart water management, ultrasonic water meters. What is the kind of addressable market that you're seeing right now? And is there been a pickup in ordering activity in this? If you could quantify that very quickly for us, sir.
So we are a metering company. We are basically a measurement and communication company. And right now we are primarily focusing on the electricity, and then we move to gas, And now the third venture we are starting is the water meters. And we got a very good break. And if you see the utilities across the globe, they are all water, gas, and electricity are generally combined. To assist our international market, we entered into the water meter segment, which we are seeing will become very large even in the Indian context in next 4 to 5 years. So it is going to be a long gestation, but yes, in next 4 to 5 years, this will become a significant market for us.
Got it. Okay, all right, Mr. Agarwal. Appreciate you joining in. Wishing you all the best. Thanks a lot for speaking to us here on CNBC TV18. We look forward to chatting up with you post the quarterly numbers yet again. For the time being, though, we'll slip into a short break. On the other side, we'll get you more on markets and stock-specific action. Don't go anywhere. Welcome back. Well, as we speak, the markets are more or less mixed. The good news, though, is that the mid-cap index is doing a relative outperformance in today's trading session. You still have more number of stocks that are advancing than declining. The headline index is down 20 points. We're not used to that. Let's see whether or not we end up the day in the green as we have been doing in the last 13 sessions. For the time being, that's it from Hormuz, myself, and the entire team that put this show together. Stay with us. Trading Hour comes up next.